Ever wonder if you're bringing a knife to a gunfight? Seriously, if you're putting your hard-earned capital into the markets based on, gut feelings or random internet threads, you're essentially playing a losing game against supercomputers. Welcome to This Explainer. Today, we're skipping the fluff and pulling right back the curtain on the mechanics of Fran Analytics Pro. Let's get right into it.
Here's a harsh, mathematical reality for you. 90% of retail traders lose money. 90%! And why is that? Well, it's because as human beings, we're literally wired to fail at trading. Think about it. We panic sell the second we see a sea of red, right? Or we buy fundamentally broken assets just hoping for some miracle bounce, and we let our emotions completely hijack our capital. It's a massive problem.
Okay, let's dive into this. The typical retail trading approach is completely driven by anxiety, the fear of missing out, and holding on to toxic assets. But contrast that with the institutional reality, how the big players actually win. For them, it is entirely about emotionless artificial intelligence, strict mechanical rules, and really rigorous data filters. Fran Analytics Pro was built to bridge this exact gap, literally bringing those Wall Street mechanics directly to personal portfolios.
Section 1. The Mechanical Pipeline. Zero emotions, pure logic.
So, Fran Analytics Pro isn't just some simple trading bot you set up on a weekend. It's a massive, relentless pipeline, operating 24 hours a day, 7 days a week. Before a single dollar of your capital is ever risked, a potential asset has to survive a brutal gauntlet of 15 sequential entry gates. We're talking macro regime checks to literally stop you from buying into a crashing market, cool-down periods to avoid manipulated wash trading, predictive AI evaluations, and super rigid cash reserve protections. If an asset fails even one of these 15 filters, it's out, discarded. Only truly exceptional businesses make it inside.
But getting in is only half the battle. Once an asset is actually sitting in the portfolio, the system runs a highly complex 12-level exit hierarchy every 4 hours. It evaluates from top priority triggers like custom AI exits and volatility-based stop losses, all the way down to fundamental exits if a company's core business starts to deteriorate. Capital is fiercely protected the exact second an investment thesis breaks. No hesitation.
Section 2. The Wall Street Audit. Institutional Grade.
So the crucial point is, anyone on the internet can claim they have a great algorithm, right? But this system went after undeniable validation. A senior risk analyst with 40 years of experience at the New York Stock Exchange officially audited this system's code line by line. His final verdict? Institutional grade. He specifically highlighted the 15-gate input filter and the 12 exit levels, declaring the code ready for production at a family office level. That's not just slick marketing copy. That is undeniable Wall Street rigor right there.
Section 3, Tier 2 Advanced Risk Management. Let's dig into the specific mechanical upgrades that deeply impressed that auditor.
Now, what's really interesting about this setup is the brand new Tier 2 Take Profit system, specifically Level 3. The data shows us that when an asset hits a massive 50% gain, there's a very high probability it's going to eventually retrace. So instead of letting greed take over and just hoping it goes up forever, this protocol intentionally captures 30% of the position right at that 50% mark. It mechanically secures the bag before the market can take it back. It's totally logical.
And think of the system's drawdown adjusted sizing as a set of heavy-duty shock absorbers. If the overall portfolio dips into a defensive zone, say between -4% and -12%, the AI dynamically cuts new investment sizing right in half. It actively defends your capital by aggressively slowing down risk exposure long before you ever hit a total circuit breaker.
The system even has a clever solution for one of the toughest Wall Street dilemmas. Let's say a stock's fundamentals completely break down, but the price just keeps rallying purely on hype. We've all seen that happen, right? Well, it uses a human-in-the-loop hybrid approach. It actually alerts you that the business is failing, but allows you to deploy an automated 5% trailing stop, which is essentially a critical parachute. So you get to safely ride that momentum wave without exposing yourself to a sudden, violent crash.
Section 4, Undeniable Proof and Next Steps.
And this brilliantly illustrates the ultimate proof of the platform. It really comes down to one single number, 97%. The system features a staggering 97% V3 backtest parity. In plain English, this proves the AI didn't cheat by looking at future data to make its historical simulations look good. That's a huge problem in trading called look-ahead bias. Its historical tests perfectly mirror exactly how the engine behaves in live, real-world trading.
I want to leave you with this final, provocative thought. In an era where institutional supercomputers are fighting for absolutely every penny, Why are you still risking your financial future on human emotion and guesswork? You now know exactly what an audited, institutional-grade AI looks like. The technology to fiercely protect and grow your capital is out there right now. It's time to stop trading with your gut and start trading with true Wall Street rigor.